Just a quick update on the analysis we did last week on dollar and Nasdaq. Starting off with the dollar, remember last week we were talking about this critical level here being 99.750 level, which would be essentially us determining which direction it will take next. Pleased to inform you that through the price action we've seen from Friday all the way till Tuesday, currently, we're trading below that critical level, which was the equilibrium price of the premium market. So I'm currently favoring shorts all the way down to this equilibrium level over here, roughly around the price 99.185. Though it's still early into the week, so I do not know which weekly profile would unfold yet, rather, but we do know we have volatility incoming on Thursday, as is prominent here. We have volatility for the dollar. We have CPI on Thursday, then PPI on Friday, and core retail sales as well on Friday. Due to the US government shutdown, we don't have the exact timings of this volatility injection, or rather news releases. So I guess we'll find out in due time. I would like to sit on my hands till Thursday, New York preferably, just to see which side the market would pick before I establish a good trading idea out of it. Curious though to see if Monday highs will be taken out before then, because if Monday highs are taken out, the Monday and Tuesday highs are taken out before then, it may be a good liquidity sweep profile, and I'd be curious to see if any opportunities will be given after that. If that doesn't happen, I'll still wait till Thursday. Uh, just an update on the bonds market. Nothing much has happened yet, because you'd see the 30 year still maintaining the same profile, the 10 year as well, and the 5 year. So you'd see I've marked out this high as an influential high that I'll be monitoring. However, if you're keen on this low, the Monday low, you'd see the Monday low for the 5 year treasury. The 5 year treasury note hasn't really gone any close to the low for Thursday. Comparing it to the 10 year and the 30 year, you'd see the 30 year Monday low has actually taken out last week's low. So there's a shorter term interest rate triad, which signifies some bullish pressure on the bonds market. Basically, what that means is some bearish pressure on the DXY market. Good thing to note is, with this confluence to my analysis, it still has me bearish in the shorter term run, at least on the DXY. That would be all on DXY. Moving forward, let's take a look at what Nasdaq is doing as well. So this was my commentary last week. I do not trust mid-range order blocks. The easier play was trading top to EQ. Once the Nasdaq posted in a high, it would have been better for me to trade from this high to either the premium market EQ or even the larger range EQ. But I didn't really get to make anything off of those trades because I didn't participate in the market. So we were calling Nasdaq lower to tag this DSSL. Just as I wrote here, I am maintaining a bullish stance until the shorter term dealing range is breached or strong macro conditions or sentiment are discovered. It is sensible to allow the deepest array to be tagged for liquidity, though the deepest array, which was the DSSL. So yeah, lovely move on Friday. Lovely move all the way to the daily sell side liquidity. I was actually able to capture this move in one of my funded accounts. Sold Nasdaq here. This was at around, let me just take the lower time frame so that you can see it clearly. Yeah, sold it here with a slight risk. My stop loss was around this high. I was aiming for the DSSL, and as you can see, immediately I left the market and positioned myself. Rather, immediately I left the market, you'd see the market reversed all the way, entirely clearing out the daily short term highs and rallying higher. So, yeah, that was last week. Into this week, still, as I said, I love the reaction. what happened from the DSSL. I wasn't keen to take the better trade, which was the trade from the DSSL all the way at least till this order block point, or even the larger range equilibrium at this zone over here. Why? Because as we had said here, I am maintaining a bullish stance until the shorter term dealing range is breached, and the shorter term dealing range being this entire dealing range here, and it's not even close to breaching it. So basically I'll still ride the famous saying, the trend is your friend, and you've been bullish for a long time. So it would have been prudent for me to get a buy here all the way, but I wasn't in front of the charts on Friday after taking the sell position. So currently in a sticky situation, could go either way, honestly, from where it is right now. Even though I'm in a bullish we're in a bullish profile rather, and I support bullish trades. I wouldn't really take a trade from where the market is right now. Maybe give it more time during the week so that it can paint something in price action that allows us to take advantage of it. So currently, I will remain on the sidelines. Another thing, the volatility injection expected on Thursday and Friday might as well affect the Nasdaq in terms of how it will reprice and deliver. So updates will be given in our Discord member channel. Trade ideas will also be communicated there in due time. That would be all for now.